New opportunities are emerging for banks with clean strategies, robust technology foundations, and a healthy appetite to take more risk than their competition to maintain a competitive advantage in the AI-driven era. And to discuss banking in the AI era, I would like to call on stage FSS and Hybrid Cloud Services leader from IBM, Mr. Haroon Muhammad Sharif, to come on stage, please.
Assalamu alaikum, everyone. I know it's been a long day and I'm the last speaker, so I won't take a lot of your time. And I promise, like Atif, that I will keep it very brief and not repeat anything. I'll just continue from what Atif just said, and I can't agree more that this is the time for action. And this is the time when we need to take that risk in order to survive in this world, which is at an inflection point. All day long, you have heard stories about what the potential of AI is, both in terms of dollar value and what it can do for your business. And I'm not going to repeat that. But I just want to resonate with it, with this quote. I'll just be sharing some highlights from a study that IBM conducted globally, talking to about 2,000 CEOs and some of the highlights from there. And this particular part just stuck with me. Right? So optimists are the ones who make money, right? And in order for you to make money is to find that differentiation point or inflection point in the industry where there's an information gap. And when you find that, you lean on that risk. That means that you double down on taking that risk in order to take that first mover's advantage and differentiate yourself from the industry. So this is a study, this is the 32nd year that IBM has been doing so. I will only be talking about a small cut of it, which is specifically for banking. So about 240 banking and financial market CEOs that we interviewed across the globe. And this also came out with the same result. 55% or more CEOs are double downing on taking more risk to maintain the strategic advantage, especially leveraging AI. But at the same time, they are also concerned about the regulatory changes that are happening and the market dynamics, which are also restricting the growth, which also resonates with what Atif was just talking about. But I'm going to share with you a path that will help you navigate these regulatory changes and still take advantage of this opportunity. Right. So what are the use cases? I'm not going to talk about all of them. You've heard a lot, and quite frankly, whenever we start a conversation with a client, typically, that is the question. What are the use cases that we can do in the banking? One use case, two use case, here and there. And just to skip one slide and just to show you, I think that slide is not here in this one. Let me go back to this. So the top use cases are in where the CEOs think that there is going to be the maximum advantage that they can take out of AI is around fraud detection. And I think that's no surprise, most of the previous speakers also talked about. But it would be interesting to see the next two. The second one is obviously cybersecurity, and the third one is AML and KYC processes. So all of this is totally 61% of the organization CEOs believe that these are the areas in banking which will have the biggest impact in terms of business value, leveraging AI. But at the same time, the challenges that they feel, which are going to restrict them, is also have been talked about. So there's not much left for me to say, but that is the skill gap that we have in the market. So I'll deep dive a little into that skill gap. So fraud detection, cybersecurity, KYC, these are the top three. These are the top investment areas from the banks, again, resonating with the same idea. So the skill gap is what, just before me, there was a panel in which one of the CIOs was talking about the role that he was trying to describe, but he didn't have a name for it, that we need more of those people and those roles in the organization in order for them to be able to take advantage of that. That is the validation role that you see. So 61% of the CEOs feel that what they need and the biggest gap is validation. Now, what is validation? Validation is not traditional testing of your AI models, whether they are performing or not, but also aligning it with the business objectives for which they were created in real world environment, whether they are actually meeting the needs or not, while they're meeting the standards of ethics and regulatory compliance that they operate in, right? So those validation skills need to be harnessed and developed within the organization. Now, those are not something that come right out of the university. So how do you do that? You need to cross-train people within the organization and give them exposure for multiple disciplines. So your risk scoring officer needs to be exposed on how AI is transforming their business function. Your data scientist needs to be trained and exposed to how risk management is done in different segments of the business in the banking. So this cross-training will allow the next breed of talent, which will allow you to fill this gap of validation. The next is risk control. I want to deep dive a little more into that. But these are generally the guardrails that you need in order to scale. A lot of speakers before us also talked about the impediments, and I think I don't want to repeat those things again, but these are the areas where AI has not been able to scale within the organization. So we have seen a lot of pilots. IBM current books on Gen AI and AI for the year 2025 stands around almost $10 billion just for Gen AI. And we've done thousands of POCs and several hundred projects which you can qualify AI working in scale. And the biggest challenge that we see is stress testing these models that we put in production for scale. And also having the ability to monitor the progress and performance of those models in real time. These are the top two areas which we felt were relevant in this particular time, where we've seen that most of the banks are claiming that they have done POCs, they are scaling it. And these are the challenges that we have seen in some of the developed markets where they're a little slightly ahead of the curve. I'll skip this. So real-time monitoring, while it is important, and this survey highlights that gap and validates that assumption as well. While it is important, only 25% of the organizations are actually applying something in terms of technology, in terms of framework, in terms of an effort to actually monitor these use cases as well. I'll give you an anecdote, from a bank in the region. I'll not name it, but when a few years back we did an AI-based fraud risk scoring work for them. It was a real-time AI model that performed, and when we handed it over to the organization, the accuracy of that model was around 87, 88%, based on the data that we used to train and move. When we moved out after a few months, when we went back and had a conversation, we found out that model accuracy had dropped down to 50%. And that was not something that was found out by the bank, it was found out by us when we looked at that model. So many times in real-time scenario, in real-time cases, in actual world, what we have seen is that once something that you roll out in a bank or any other organization for that matter, over a period of time, people forget about what they did. In this particular case, we cannot afford to let these models, let these AI to run on its own. You need to constantly monitor them, understand the efficacy of them, and continuously evolve them with the new data sets and the new insights that the AI is sharing with you. I'll skip this as well. So at the end of the day, I just want to leave you with two areas that as a bank that you need to focus in order for you to navigate the regulatory compliance. IBM has a platform called Watson X. It's a brand name that you guys are all familiar with. It has a platform which is called watsonx.governance. It's a common platform that allows you to monitor AI regardless of which platform are you using, whether it's on Amazon, whether it's on Azure, whether it's on-prem. But you're able to see the entire lifecycle governance from its inception to its execution and monitor it in real time. So this platform will allow you to be able to navigate the regulatory compliance and challenges that you would have when you deploy AI at scale. So you don't have to be afraid, because if you want to harness the best of the breed, you would want to harness every technology platform. You want to bring out the best that Microsoft has to offer, or Amazon has to offer, or Google's of the world has to offer. But you want one platform to support your bank to cut across all these platforms and monitor the performance of these AI models, and also to see the implications that it has in terms of ROI on your business value, and also to satisfy the regulators and internal auditors from an ethics and bias point of view as well. So with that, I'll beg leave, and thank you very much, and I hope that you have a great rest of the day. Thank you.